Hey, I'm Charlie Bathgate. I'm the CEO of Lucci.com and WallStreetJesus.com, and I have a question for you today. What would you give to become a trader who is consistent not just in terms of your profits, but in terms of your confidence? You know when to cut your losses, you know how to let your winners run, and you have a read on sentiment that other traders would kill for. The truth is that the information that you need in order to trade with that level of confidence is available to you right now for free in every single trading platform under the sun. It's just that no one has ever taught you where to find it and how to read it. What I'm talking about is tape reading, which is the subject of the interview that you're about to watch. When you understand how and why the market is moving through the lens of tape reading, your trading will change forever. So, enjoy this interview, and if when it's over, you're interested in learning tape reading from Lucci himself, I invite you to check out the link in the description below and go learn more about the master course. You can set up a call with our team. The next live session of the Lucci master course starts in just a few weeks, so now is the time to join. Okay, enjoy the interview. So welcome everyone to the first episode in our Everything is Tape series. I am Charlie Bathgate. I'm the CEO of Lucci.com and WallStreetJesus.com and TradingThePost.com, our whole little family of websites over here. And I am joined by a man who needs no introduction, Lucci himself, also known as Anand Sanghvi. Lucci, say what up.
Hey everyone, what's going on? Thank you for joining.
Yeah, so today we're starting off our Everything is Tape series, which y'all have probably seen us talking about on social and promoting. This whole series is going to be all about tape reading. This is our specialty here at Lucci.com. This is what we do, and the reason it is our specialty and our area of expertise is because of this man, because of Lucci. So we're basically going to be breaking down tape today in two different ways. One of them is going to be looking at tape as like a practical skill set, which Lucci's going to talk a little bit about, like actually something that he is doing every day in terms of looking at the time and sales in level two. And then we're also going to talk about it from a bigger sort of philosophical level, which is really about how tape is a way of viewing markets, a way of even looking at the world. And it's broader in a lot of ways than just that sort of skill set of looking at level two in time and sales. So that's what we're going to be going through. I know you all probably have a bunch of questions. Just put them in the chat, and we'll get to them. Certainly if we can. I know we have an event starting at Lucci's offices in Trade Space in like 40 minutes. So we're going to be efficient. We're going to be on it, and we're going to try to not have a bunch of people yelling in the background. So with that in mind, I'm going to shut up. And Lucci, do you want to start out and just talk a little bit about? Maybe start with just your like how you started learning tape, maybe
Yeah,
like origin story, where it came from for you.
yeah, sure. I learned from a bunch of guys who basically this was how they learned, about trading in general. But we're talking about decades ago, right? So we're talking about folks that learned how to trade in the 90s, folks that learned how to trade in the 80s. This was when, retail brokers, let's just say, weren't as bountiful as they are today. Technology wasn't as easily copyable, if that's a word, as it is today. Technical analysis did not. It was obviously in existence, but it wasn't something that was so expanded upon as it is today. So and then digital markets, access to digital markets was also difficult to come by as well. Those didn't kind of spring up until the 80s and the 90s. So I learned from guys who, um, kind of went through the tech boom, and they were able to short aggressively a lot of the things that were happening, during the tech boom. So most companies like a Microsoft, or had a 10x kind of multiple or 20x kind of multiple on the price, and they were able to do pretty well on the short side. Um, and that was their kind of exposure. So when they went ahead and opened up a lot of these prop firms, these proprietary trading firms, as they were called, basically they gave out the opportunity for somebody like myself to come in, drop a little bit of money, and try to make some money using their strategy, their proprietary tools, their technology, their speed. And again, it was beneficial for them because commissions were still super high. Remember, at this moment in time, you can go on a Robinhood right now and trade for free. it's not completely for free, but yeah, you can trade for free. Back in the day, 2006, 90s, you're paying $20 to $50 just to get a trade off. You know what I mean? Just to be able to get access to this game, you're paying a lot of money. And whatever orders that you put through, they were a lot more valuable than they are today, let's say. And that value came by the way of commissions and things like that. And then 2007 happened, and the markets changed forever. This is kind of when the exchanges like Arca, Amex, a lot of these exchanges that push volume today, and you can even see them kind of up on my wall here at TradeSpace. You see the VIRT, you'll see Philly. There's all these exchanges. They became for-profit models. So instead of kind of promoting this nice free market, so to speak, where everybody can kind of trade, exchanges now started to fight for every single dollar and every single piece of volume and every single order, which which paved the way towards low cost commissions completely and everybody getting paid on the back end. So again, markets kind of shifted from a structure perspective. And that's kind of where most of the technology kind of sprouted out from, all the HFT stuff that happened after 2007. And these are things that most retail traders, let's face it, they don't even understand. Half the people who are watching this probably has no clue what the hell I just said in the last 2 minutes right there. You know what I mean? So that's most retail traders right there. So tape is really about understanding what the hell we're actually trading here and why it moves. What are the things that make price move in this day and age? It's kind of going back to the basics of how all these things work. And, when I entered that particular firm, they had their technology, they had all that kind of stuff, and that was when they introduced me to what was called a level 2, and I would start looking at this kind of level 2 bid and ask. I would look at these transactions, and that's kind of how it started. And it was really just looking at transactions and bid and ask changes over a period of months. Then I started to realize, like, oh, okay, this is kind of what's going on. And then as I was able to relate it to other secondary markets, because the stock market is nothing more than a secondary market. Think about it. A stock goes public through an IPO. If you're able to get in through the IPO, that's considered your primary market, right? Now, the only people who are able to get in on the IPO are private customers of banks. You got to be somebody. You got to be somebody in this day and age to be able to get IPO shares of something. And then once the shares get listed on the public market, aka your Fidelities and all this kind of stuff, then it's a secondary market. Now everybody's trying to flip it and trying to figure out, is it going up and is it going down? And just like that, secondary markets now kind of, control the way we interact. I mean, even Amazon right now. You're going to Amazon and you're buying something for $20 that you could technically get if you walk your fat ass down to the dollar store, and you could probably get it for $5. You know what I mean? Then you're just buying it on Amazon for $20. So that's also another secondary market as well. So that's kind of when I started to learn like the different dynamics that push price around, buyers and sellers, behavior of these buyers and sellers, and like just markets in general. And that kind of, that was kind of how I got started. 2006, 2007 kind of.
Right. Okay, and so let's talk about tape reading. What are you actually doing when you are reading tape? What are you actually doing? What are you looking at on your screen?
That's a great question here. Let's get to it here. Let me go ahead and share a screen here, and let's just take a look at. I believe we're looking at Tesla today. Let me know if everybody can see the screen. Charlie, are you able to see it here?
It's still loading.
Okay.
So let's give it a sec. Yeah.
Okay, so it's still loading here.
So
basically, I'm trading Tesla this morning, and the tape yesterday got me kind of feeling that, there's going to be some selling. Somebody was out there selling a good amount of shares yesterday, and then I felt
wait, hold on. When you say the tape gave you that feeling,
yep.
So you saw what? You saw
I'm going to show you. I'm going to show you.
Okay,
I'm
cool, cool,
kind of.
cool.
I'm going to show you off the open here today. So this same kind of tape happened yesterday as well, and I can show it yesterday. But so basically, what I'm looking at is these are. And by the way, this is Fidelity. It's going to look different on your platform. It's going to look different everywhere, but it all has the same information. So what tape is going to show you is a timestamp. It's going to show you the last price of the last transaction. It's going to show you the size of that transaction. It's going to show you what exchange it was traded on, and then it's going to show you sometimes, in some cases, if you're looking at historical, depending on where your broker is, it's going to show you the best bid, the NBBO. And what is the NBBO? The NBBO is the national best bid or offer. Okay, so basically this is the top line of your level 2, right? So this is the best price that you can get on the bid, and this is the best price that you can get on the offer. Fidelity shows it in this nice way. That way we can see whatever the top line is of that level 2. So basically, I'm looking at this. This is what I'm looking at. I'm looking at transactions. I'm looking at the speed of those transactions. And most importantly, I'm looking at where the transactions are happening. Are they happening on the bid, or are they happening on the offer? And that's more or less what I'm doing. So for example, in this equation, or in this particular line, and by the way, this is something that we go through obviously in detail in the master course, but in this particular line here, we can see that somebody is bidding for 2,600 shares at 184.60. And then at that same time, all these transactions are happening at the same time. So as people are selling into this bid, you can see this bid start to decrement, right? So it goes from 2,600 down to 1,500, down to 1,100, down to 900. So that means people are selling into this buyer, right? So imagine I'm the one buying this 2,600 shares right here. If I'm the one buying this, as somebody is selling it to me, obviously I don't have 2,600 anymore. I have lower. I have a lower amount until I'm gone and my order is filled, and now the stock is able to go lower. Okay, so I'm looking at things like this. I'm looking at size on the bid. I'm looking at size on the offer. I'm looking at where transactions are going off. I'm looking at the speed of how these things are happening. I'm also calculating, how other things are moving as well. But that's what I'm looking at. That's literally what I'm looking at.
There you go. Okay. So then let's just assume, so you're looking at this, you're watching it.
Yep.
You're obviously like watching the activity of buyers and sellers in real time. Why do you feel like that information gives you edge? Like, why do you do this versus all the other ways of, market analysis, technical analysis, or Fibonacci's, or whatever else? Why do you do this?
This cuts to what it actually is. The easiest way to put it is that all technical indicators and all technical analysis and all charts and all these patterns or whatever that you can talk about, they are all in what is the word here? They're all lagging, right? So they're all going to come up and give you a read after the fact, right? After something is already happening, right? So for example, if you look at if we looked at Tesla for the last 2 days here, let me go ahead and change to a couple days here. I don't know how quick I'm able to do this, but let me go ahead and try to change to a couple of days. Here we go. 1 second here, guys. Right, so let's go to 2 days here. So this was yesterday. I started selling right here. This is literally where I started selling because I saw the same tape as this morning, more or less. So basically, I saw this program up. I don't know why the hell it happened. I can't explain it. However, once I started to see that selling come back in, and then once I started to see these programs sell back down, now you have situations where you can kind of create a theory where you can prove it through the tape, right? So without using any technicals or anything like that, you can basically kind of say all of these people who got long Tesla and anybody who thought, this thing was going to 200 is now going to have to look at this and say, oh crap, I got to get the hell out of this thing. And you could see it. You could see the panic in the tape, and I could see the sellers come in aggressively, just on the tape. And again, the chart is a representation of the tape. So when you're looking at the tape, you're seeing the actual source of what your charts look like. When you look at any chart, it is a representation of what is happening on the tape. So I can feel it. I can feel that tape. I can kind of become that particular name for that moment in time. Okay, and I can feel it way more, and that gives me so much more confidence in my execution, in my in my sizing, you name it. This to me is the truth of the markets. whatever it is that you're taking a look at, these transactions are the truth. It's on you to be able to come up with the right theories, though, and to be able to come up with the right read on these things. Okay, because again, you could come in here reading this thing with the wrong theories and take out something completely, something completely wrong. So you still have to have some knowledge of what's going on, who the market participants are, to create the right theories. But this is the truth. The tape is the truth. Charts and all these technical patterns, they come after. They come way after. And most of the money is made in very small periods in time, right? So once that money is made, and once your technicals decide to say, okay, now we're finally a short, easy money is gone. Easy money is gone. I want that easy money. That's the place where I want to be. So I bought an option for Tesla at around $4. This morning I sold it out for about $10. And by the time any chart or any technical indicator decided that, hey, maybe we should short this thing, that money's off the table now. That money's off the table.
Right.
You're already buying an expensive option. You're buying a move that's already kind of giving you the juice. Sure, there could be more on top, but I'm going for when that easy money is made, where the least amount of people are in that move. So that's kind of why I use the tape more so than anything. That's why I chose always to stuck with the tape.
So when people come to you and they're like, "No, man, it's like reading the code of the Matrix. It moves too fast. I can't do this. It's too hard." What do you, what do you say to them?
I mean, trading is hard, man. Like, trading is even if you're a technical analysis trader, it's hard. It's hard. Like, even if you're going out to, perform, whatever it is that you want to be good at, it's freaking hard, man. If you want to be good at a sport, it's hard. All of this stuff is hard. It's incredibly hard. But for me, I want to put myself in the place where the least amount of people are making the largest amount of profits, right? And that's what the tape shows to me. That's what the tape allows me to do. And and again, there's all kinds of ways to make money out here. But yeah, 100% it's going to be hard. 100% it's going to be hard to read it, but this thing is hard. It's hard in general. And again, for folks who come to me and say, "Hey, this is too much information. Do you have a program that can do this for me and all this kind of stuff?" Remember, I'm not sitting here looking at every single transaction. My eyes are tuned into the market. Therefore, I only need to see and read very little pieces of information to get the information that I need to build the confidence on my execution and things like that. So I'm not sitting here reading in every single transaction. But you need to understand why markets move the way that they do and what influences prices to move. Otherwise, you're just looking at a chart and guessing and throwing a dart here, trying to figure out where these things are going. If you can get more to the truth of it, which is the tape, buyers and sellers, how they behave with each other, you're that much closer to creating better ideas, having way better execution, and thus in turn, finally achieving some of those dollar goals that you got from a P&L perspective.
Yeah. Um, One of the things that I think traders can get overwhelmed with, it's actually like a misperception, is that they come in, they're like, all right, I'm sold on this thing, tape reading, this sounds awesome, but I've already invested years of my life trading
Yeah.
and like getting pretty good at another method of trading.
Yeah.
Can you help people clarify a little bit, like the understanding that tape reading doesn't have to be a replacement for what they're already doing? It's a way to actually juice up, like supercharge, what
A
their
hundred,
approach.
100%. And again, we've also incorporated that into the master course as well, because we've realized that absolutely people have decades of experience themselves, and then they come to adding tape reading into their repertoire or their toolbox, and they start to kind of get confused, right? It's kind of like trying to adjust a habit that you've always had for years and how difficult it is to change that particular habit. So tape can augment what you are already doing and can help you get better executions, just can help you avoid dangerous situations as well. But as with anything, you have to slowly kind of incorporate these things and slowly see the results kind of over time. So you got to work at it just like with anything else. But absolutely, we get tons of people that come to us who still want to use their technicals. I don't sit here and tell them not to, right? Levels are levels. Everybody has levels. Everybody and their mother has levels for every single freaking stock, and they love to talk about their levels, and they love to talk about how they came up with these damn levels, right? So I'm not sitting here saying you can't have them, but incorporate a little tape at those levels. Incorporate a little tape into you formulating your theories, and you'll be surprised, man. You'll be surprised how much you can reduce crappy decision making. You can reduce some of the errors on your execution. You can get better on position sizing, adding, subtracting, and things like that. And more or less just kind of avoiding some pretty bad scenarios.
Yeah. Yeah, I mean, I think so. One of the educators for the master course is Ron Friedman. He created this strategy called Trading the Post. We're going to have him on as part of the series, and he'll talk to how he uses tape. But he's a really good example of somebody who was very, very good options trader. And then he came to the master course. He learned tape reading from Lucci, and that locked in pieces for his trading that took him into the stratosphere. And it's one of the reasons why he's one of the best traders that any of us know at this point. So, so I think that'll be a good example for it. Lucci, I saw a question in here that was like, this is for stocks mainly, right? Tape reading. And I wanted to use that as an opportunity to zoom out and talk about tape reading on a broader level. And when I hear you talk about tape reading, one of the reasons why I love it is because, I've known you for 12 years now. We used to live together in New York. And what you guys need to understand about Lucci is that he is he's fascinated by human nature, right?
100%.
Lucci, correct me if I'm wrong, but this is one of the reasons why you are so drawn to tape reading, because it's just a way for him to look at human behavior in general. When we used to go to bars in New York, there's people who just like go to the bar and they get a drink and they just like stay in their corner, right? Lucci loves to see the energy distributed throughout that social environment, right? He's like, why is there a bunch of people over there? Why is this happening here? He can see the flow of energy and movement in a space, right? That's what he's doing in tape too. And so when someone asks, is this just for stocks? Luch, it'd be great if you could talk about like how tape applies broadly, how tape, in the vein of the name of the series, Tape is Everything. What the hell do we mean when we say tape is everything? What are we actually talking about?
What we're talking about, and just you pointed it out, man, what we're talking about is the collective mindset of millions of people trading the same damn thing, but not only those people, right? Retail traders, it's market makers, it's institutions, it's mutual funds, it's how all of them come to the market and decide to participate, right? Based on whatever it is that they have going on. Some of them base their decisions on news, some of them base their decisions on friggin' fundamentals. Also, a ton of them are technical analysis traders. Institutions here are looking for specific edge. HFT is looking for specific edge that they can scalp. They don't give a damn where a stock goes. There's so many people out there that are trading the markets. There's so many entities that are trading the markets, and all of them have a different reason for being in the markets. But guess what? Price is influenced and it moves because of everybody involved. So if I'm coming to a market and I'm not understanding who are these people and what do they want out of this thing and what are they going for, then we're doing it wrong to begin with, right? So you brought up a point of, tape can only be used on stocks or something like that. Like I pulled up a chart of this option here that I'm trading, the 190 here. That's me. This candle right here. This candle right here is literally me. That's me, right? Buying here at actually that one right there is me. Buying there at 380, right? That's literally me. When I say that's me, I'm saying that's me, right? So, like, you're seeing me on that particular chart. I'm buying that many options, right? So this is a candle. This is a wick of 1,000 options, right? I had like 700 of this, and then right off the backs of it, there was other people that were buying as well because everybody's looking at the same shit, right? And then when you look at what Wall Street Jesus does and pumps out all this option flow that we also push out through the steam room, you saw tons of other people buying this option, right? And all the way throughout to the end of the day. Okay, and we literally saw tons of people buying 190s and 180s. That is tape. That is tape. That is aggressive buyers saying, yo, I want some risk right now. I want some risk right now because I think this shit's going down. So they're going to buy these 180 puts. They're going to buy puts for next week, whatever the hell it is. They're going to go ahead and start buying it. Now market makers, when they see this, they're like, oh shit, we might get run over here, because remember, if I'm a market maker, I have to sell you those options, right? Who the hell am I buying this 1,000 lot of options from? You think it's freaking somebody in our chat room? Ain't nobody in our chat room that is able to sell a thousand lot of Tesla puts. You know how much freaking leverage you need to have to do that naked? These guys are out there doing it naked. They're flying around. They're just selling us the liquidity. That's it. So most of the time, they don't even damn what anything does. However, they know when they're going to get run over. And what do I mean when I say run over? If I'm a market maker and I have to sell all of you guys puts at, $4, $5 or whatever, you think I'm going to let you walk into money that easily? I have to do things to make sure I cover my ass. So what do I have to do at that point? I have to start selling stock. I have to start buying options as well. I have to start hedging out of my risk, which also moves the stock down as well. And I can see it kind of all coming through the tape. So I'm loaded up. I'm ready for this to happen. This morning happens, and literally, it was just a mad exit. Somebody was gutting 100,000 shares, 200,000 shares of Tesla at like 1 minute clips, 2 minute clips. And then this thing just got blown up here. So the option shot up to $7, $8. People are still buying this on the way up, and I'm coming out of it. I'm sitting there, all right, let's just start offloading this. We made 100% on this. So again, the option is tape. The stock is tape. The market is tape. How you look at all this shit is tape. All the buyers and sellers that you're looking at, they're looking at the same thing. Everybody is looking at the same thing. They're not sitting there looking at the charts. You think a market maker is sitting there looking at a fucking chart? Absolutely not. None of these bigger guys are looking at freaking charts here. All they're looking at is positioning, trader positioning, retail positioning, who is on the wrong side of this thing, who is going to get blown out, how do we squeeze this person, how do we squeeze that person. They're in there for edge. They're not in there like most retail is like that. Okay, so you got to start. That's how you want to start looking at the markets. So when somebody asks me like, oh, this only works on equities, or this only works on options, or this only works on whatever, you're doing it wrong here. This works on all of it. It's a way of life. It's a way of looking at business. It's a way of looking at markets. It's a way of looking at secondary markets. It's a way of looking at all this stuff. Real estate. You want to look at real estate. You want to look at shoes. You want to look at Amazon. You want to look at all this stuff. All of it is tape. This is all
Well, you
tape.
should.
Yeah.
Perfect example in terms of real estate. When you went down to Puerto Rico and you were looking at buying an apartment, and you should tell that story when you're sitting in the lobby of
Yeah.
the real estate office. Yeah, and you're like, there's a guy in front. Yeah, go ahead. I'll let you tell.
Oh yeah, absolutely. Real estate as well. I mean, I moved to Puerto Rico specifically to take advantage of some interesting tax incentives, and of course, there's also other people doing it as well. I moved in maybe 2018. I go to look at this. I walk in luckily to the leasing office at this one apartment complex. They had a new tower coming online, and they hadn't even sold any of it, but it just was completed. But they opened up showing to a couple private buyers. I just happened to be in the area, sweet talk my way in, so they went ahead and started doing the showing. And as I'm going through the showing, the apartment to me was like, dude, this shit is gypsum board. Like this looks regular. And again, like I lived in Boston and New York, man. You know what we got in Boston and New York for $4,000, $5,000. You get some fly shit. So I'm like, all right, fine, whatever. I go down to the leasing office. They're looking at the prices. They're telling me it's like 250, two and a quarter, or something like that. The couple, it was an old Puerto Rican couple who was with me. That was who they were doing the showing for. This guy's like, yeah, let me get 10. He just said it. He just said it like that. He's like, yeah, let me get 10. I looked at him. I'm like, I did a double take. I'm like, this guy's like 65. You know what I mean? This guy's like 60. I'm like, what the fuck did you just say? And then he was
Mhm.
like, man, I might buy even more. And then he's just pointing out which ones that he wanted. He was like, yeah, give me the penthouse, give me this one, give me this one, give me this one. I'm like, what the fuck? And then I started putting two together. I'm like, all right, why is this guy doing this? What does he know that I don't fucking know? Forget it. I'll figure that shit out later. Buy a couple here now, and then I'll figure it out later, right? By the time I get down there, I started to realize, right? This was kind of like it's kind of like a city within a city, right? It had everything there. Everything was already there. It was kind of like the only luxury kind of complex in that area. And then 3 4 years later, I sold for almost 3x. You know, and that's tape. That's tape right there. I just happened to be in the
That's
right
tape.
time at the right moment, and in the right period where a big shift was happening in that particular area. That's it. That's it. That's it. You're just reading what's happening in front of you, and you're using that information to make decisions here. That's it. Some people's tape is not even the market. You know what some people's tape is? Social media. Social media. They make their investment decisions based on social media, but they look at the actual data behind social media, right? So if all of a sudden there's an uptick because Lululemon is selling freaking yoga pants like crazy. All right, I'm gonna go buy the fucking stock right now. That's it. That's it. Simple. You know what I mean? They're not looking at tape. They're not looking at any of this stuff. But they're using data. They're using behavior. They're using what they can smell, see, and feel for their investment and execution decisions. That is tape. That's what tape is. So when people look at a level two, they're like, "Oh, this shit is too complicated." Break it down in this most simplest form. That's how you want to look at markets.
Yeah. Yeah, I mean, I think what you just articulated is basically like the difference. A tape reader is someone who understands how markets work in the purest, most simplest sense. And once you learn that, and once you know that, you can trade any market. You know, Lucci,
Yep.
you are famous for saying like, if you give me a time and sales and level two, or if you give me tape for anything, whether it's crypto, whether it's
Yep.
any, it doesn't matter. I can trade.
Yep.
And I don't need a bunch of charts. I don't need 60 screens like, you know, fucking swordfish style or whatever. Like, give me
Yeah.
a single screen, give me the
Yeah.
tape, and I can trade it because you
You know,
understand how markets work.
when crypto came out, that was when it became like 1990 again. It was like party like it's 1999 again because there was no regulation, there was no regulated markets, there was no connected SIP feed, a data feed that required exchanges to have the same freaking data across so Fidelity, E-Trade, and wherever the hell you could post a trade or execute, they had to have the same data. Crypto, there was none of that shit. So you had pricing for BTC on one exchange, there was $1,000 difference between another exchange, and there was arbitrage through the ass, for years to be able to scalp on. So you don't even need to be a trader anymore. All you needed to do was look at two markets and try to and buy something on one market, send it to the other. All you had to do is figure out how to do that. So then there became tons of arbitrage. All that game came back, just like it was the equities in the 1990s and the 80s for fractional pricing and things like that. Now we have to actually trade. We have to actually trade. You know what I'm saying? To make money. It's shit is hard. It is not easy, right? Back then it was much easier. That was crypto, 2015, 2016, 17, and 18. Now a lot of that edge is scraped out, but again, that was crypto. That was crypto for us. And then when they came out with futures, perpetual futures, a lot of these other contracts that then I could short, right? Before you couldn't short in a lot of places for crypto. Then they came out with the perpetual futures, and that opened up the door to shorting. And that was, dude, I took a $10,000 account in freaking Binance and turned it to $1 million, man, just because it was just another game to play. And it was the same game, but it's the same game. It's the same game. It's the same game.
Right. Right. Yep. I hope this is landing for you all. I hope you that we're kind of differentiating between, okay, there's this practical skill set that Lucci does with tape reading, which is that he applies mostly in equities and options and some futures, which is he's looking at the time and stance, looking at level two. So there's what he actually has up on his screen every day, and then there's this broader sense of everything is tape, right? And I think we're going to be exploring more in this series with Wall Street Jesus and with Ranchero and with Chris Cady is like every trader who is doing this for real, doing this, independently and successfully over a long period of time, they find their version of tape. They find their way to understand actually how markets work so that instead of like chasing news or, chasing some lagging indicator, they have an actual sense for what is going on in real time. Okay, let's get some questions because we got a ton of questions in here, and we got a little time, I think, for that. So,
Cool.
Lucci, in terms of you filtering out smaller orders on the tape,
Yeah.
do you do that? Do you set up your platform to filter out certain orders, or do you want to see it all?
Yeah, no, I don't do that because again, I just want to see it all. But remember, I'm not looking at every single transaction. You guys are asking that question because you're looking at every single transaction. You're still trying to find the diamond in every single transaction. Again, this is why you need a little bit of coaching here to figure out what the hell you're looking at and why, right? Because most people, when they start reading tape, this is the questions that they're going to ask for months. Remember, it took me 6 months to figure this shit out. I was looking at a bid and ask. I couldn't figure out if a transaction was a buyer and a seller. Then I was like, oh, it's fucking both. Duh, duh, right? But at the same time, it's not about it being a buyer and a seller. It's about how. It's about the why. That's why what Wall Street Jesus does is so freaking important. Because if we pumped in there's trillions of dollars in options being bought and sold every day. If you tried to make sense of all that, you'd be dead. You'd be dead from freaking overload of brain activity. It's impossible. It's impossible. There's no point even to look at it, right? You need some kind of a screener or some kind of a filter. And Wall Street Jesus is that for us. Now, what does he do? What does he do? What is he filtering for? Well, that's the secret sauce. But he's filtering for aggressive buying and selling because aggressive buying and selling looks a certain way. It looks a certain way and it's easy to point out, right? And it has the most information for us because it's relatable and it's transferable to an actionable play. If somebody is out there not giving a shit about $1 million in puts or calls, and they don't care about what price they're buying. They just want the risk. We want to know about it. That's an aggressive buy. That's an aggressive sell where we can follow here because chances are there's going to be some price movements. Because if you're just going market for 1 million shares or 2 million shares, then damn it, you're going to have some effect on the actual stock too. All this stuff flows in together. That's why what Wall Street Jesus does is so important. That's why the way that you want to read the tape is also so important. You need some practice. So anybody who's asking this question, you don't have enough practice, you need to talk to me. It is what it is.
What about time frames? So is tape reading only good for if you're scalping? Is it good for swing trades? Like what time frames do you use it on?
I use it for everything. I use it for everything. It is most effective. I'll say this right now. It is most effective and most relatable in the short term, aka like you'll see immediate results on what you're seeing right now. However, the largest money that is made hands down is through the swing potential. It's catching a name like Chipotle that goes from $1,000 to $2,000. It's catching a name like Shopify from a short of $1,700 to freaking $900. It's catching those types of moves, and it's watching tape daily to figure out if you're still in these kind of trends. So there's tape for both, right? And there's different kinds of things that you're going to be looking for to extract information for both strategies. And remember, this is again what I was talking about by being able to come to the tape to get the information that you need to support whatever it is that you're doing. Remember, going to the tape without any theory or without any particular idea, you're just looking at you're looking at a river. You're looking at a cascading river and trying to figure out what the hell to do. Versus, hey, I'm going to this river specifically to grab a pail and grab a bucket of water, or to catch this friggin' fish that is probably going to jump out over here, or blah blah blah. You need a theory to come to the tape with.
Right. Um, and one of the things that I've heard you talk about in other contexts is how when you read as much tape as you do, you really get to know names, and
Yes.
you are picking up on patterns and dynamics within those names. And someone brought up
100%.
like, well, how do you know what algorithms are doing? I mean, I've heard you put together the pieces over time that you're reading a certain name and you're like, you know what? Someone's using a different kind of buy program in this name. Like
Yep.
this, some kind of algorithm is
Yep.
is at play in Tesla or whatever, and
Yep.
that informs your entries, that informs your sense of the activity that you're seeing in there. I mean, can you talk a little bit about just maybe algos specifically and how that affects tape?
Absolutely. So I'll use an example of this spy chart for, I don't know, let's see if we can get it for this time frame. What spy will always do is, or yeah, what most large cap companies will always do, and this is just trading, right? This has nothing to do with the actual companies. This is just how the market works, right? um last week Down here, everybody was positioned for a huge crash to, 380 on SPY. And you could see it. You could see it in the rhetoric from the news. The news was like, this news is horrible. Everything is horrible. And then we had one Fed meeting come out where they hinted that, we may not raise rates, right? And all it was a trap, because at that moment in time, you have everybody trapped short. And all it took was this one program and these words of the Fed speaker, which, by the way, they changed it 2 days later, and now all of a sudden we're reacting differently. All it took to position everybody, to squeeze everybody short, was that one piece of news from the Fed that hinted towards the fact that, hey, maybe we won't raise interest rates as aggressively. And what that did was it pushed, number one, all the programs ran off the news, because first there's a news algorithm that just picks up words, right? And then off the
Right.
backs of those words, these things happen. Now, off the programs, prices change. And when prices change now you have human behavior change. Now you have emotions change. Now you have a situation where at the lowest point, by the way, it always happens at the lowest point, or vice versa on the high side, right? At the lowest point where everybody's like, dude, that's it. We're going lower. Everybody's positioned on one side. Put premiums are juiced to the friggin' roof. At that point, that is when we are the most vulnerable. Everybody is the most vulnerable. And all it takes is something little like this to create this frigging, this stampede where everybody who sit there who's long puts, they have no choice but to get out, because they are now 90% down on their freaking options. There's nothing that you can do anymore. You're now so down on your positions, and you now have no choice but to get out. So not only do you have a stampede of new buyers, you have shorts that are scrambling to get out, and now you have market makers who, by the way, sold you all these options for ridiculously high prices, and now they're just buying them back from you. That's all they're doing. They're sitting there buying it back from you, and things like this happen all the time. And it's weird how programs erupt when the most when people are the most vulnerable. So you start to get once you start to get out of the short-term zone of reading tape, then you start to zoom out, and you start to put things together that you wouldn't freaking believe. You would not believe. But it's off the backs of that there are millions of dollars of opportunities. I'm not talking about millions. I'm talking about tens and hundreds of millions of dollars that just get moved around. And those are the times where it happens. But most retail will never catch them. Why? Because they are the ones that are emotionally vulnerable and on the wrong side of the trade. That's what happens time and time again. And I've been doing this for over a decade now, and I've been doing the same thing since I freaking started, man. Using the same shit. That same concept, which, you know what that means? You know what that means, Charlie? That means that human behavior and the behavior of these markets is way more important to understand than the actual ticks itself.
Right. We got a lot of questions in this chat, and I will say we're not going to be able to get to all of them. So if you end this with a question, shoot us an email at contact@sanglucci.com. We're good at answering, questions on that. Or if you go to sanglucci.com, you go to the master course page, you can set up a call with a member of our team. We'll take you through answers to your questions too. So we can help you out on that front. Maybe let's get like one more. Are volume levels important? Are you looking at volume in this? Yeah, Lucci, you want to speak a little bit to volume?
Me personally, I'm not looking at volume. However, again, like volume is kind of like it's kind of like a natural recourse of tape as well. The more volume and the more aggressive you see people buying or selling something, you'll easily kind of look at that. But again, like I don't look at it as the first thing, because again, I'm reading the tape, so I'm seeing the volume in real time. I'm not looking at volume
Yeah,
after
you're
the
literally
fact.
looking at it.
Exactly.
Yeah.
You know what I'm saying? I'm not looking at it after the fact and being like, oh, that was a big volume candle right there. Like, I'm watching it in real time. And remember, I'm also buying and selling it at the same time. Like, I showed you that option where I was that whole candle right there. You know what I mean? So I'm also one of the players in these things as well. You know what I mean? So When you start to play around with size, you start to play around in a market where there's other players with size as well, and then you're starting to dance around with a market maker. That's all tape too, because remember, you're playing with other people, right? This is a game where you're playing with other people. At the end of the day, it's about your P&L, but you're playing the game with other people, and you're trying to figure out what these other people are doing, especially the market makers who are selling you those options too. And that's an advanced level, but you're going to get there as you start learning what tape is and why you should read it.
Yeah. I think that's a good place. I mean, we're about to hit the start time of this event, so we're about to get invaded. Lucci's trade space is about to get invaded by a bunch of drunk people. So, this is just the first installment episode in this series. So I hope you guys keep coming back for the next week. Next Wednesday, I'll be on with Wall Street Jesus. We'll be talking about similar stuff. And if you have more questions too, we've done a lot of content on tape reading. Search our YouTube channel for tape reading. There's a lot of really good stuff out there where Lucci breaks down in more detail what he's looking at. Yeah, I think that's it. Thanks everybody for joining. Thanks for being here. And Luch, appreciate you joining, man.
Thanks, man. Thanks for joining us. And again, check out all the materials here. Stay tuned on the webinar series, man, because we got a lot of cool we got a ton of other people who are going to show us how they use their tape. You know what I mean? And their tape looks different than mine, but it's still tape.
Yeah, boy. All right. Thanks, everyone.
All right, take care.